My vacation is over. The 4th of July is over. Happy belated 4th of July to all of you, and welcome to the Traders Podcast, episode number 27. I'm your grateful and appreciative host here, Jeremy Ritz. Excited to be with you today after a break there last week. Excited to be delivering to you another episode, a brand new episode where we are going to talk about earnings. When stocks report earnings, what does it mean? We have a new earnings season that's going to start next week, and they're really impactful for the market in terms of how the market moves up and down. And I want to make sure that you have all the information related to earnings, how they impact stocks, and how you can trade them. And here's the thing that's unique about earnings is sometimes companies report their earnings in the morning, which you're able to control your trades if the market's open. But some companies, really most companies, report after the market closes, sometime after 4 p.m. And so a lot of times, let's say that you're in an options trade and you have calls or puts, you can't trade those things. You can't close them if it's reported after hours. Shares you can. So just little things that I want to make sure you know about earnings. So we'll get into all that here today. But just want to say thank you for being a supporter of the Traders Podcast. Here we are, episode 27. We're at the halfway point of 2024. Very excited about that. Hopefully you guys are crushing it. Today, we're going to have an Ask a Trader session, and we'll also take a look at Mr. ROKU, who is slowly creeping back from the depths of its grave after it went down below COVID lows. It found some support, and we'll see if it holds. So excited to check all of that out for you. But without any further hesitation, let's go to Ask a Trader. All right, so I have 3 questions here today that I'm going to get into. And the first one is, Jeremy, is there a specific broker that you recommend? And yes, if you've worked with me or if you followed any of my stuff, you know that I'm a Interactive Brokers fan. It's the brokerage system that I use. I started out with Robinhood on my phone. And I actually really liked it. But as I became more serious about what I was doing, I needed a professional brokerage system. And that's why I went to IBKR. So you'll hear people call Interactive Brokers IBKR. So I always recommend that. No, I don't get any kickback or any type of sponsorship from them. It's just a really robust platform. And the thing that I like about it is when I put an order in, it tends to get filled very quickly. There's not a lot of waiting. And so I like that reliability component of the system. Now, this is not to say that there aren't great brokerage systems out there, because there are. You have Thinkorswim, just even Robinhood to get started. So don't feel like you have to use IBKR. However, if you're asking for my professional opinion, what I think, IBKR has been outstanding for me. So that is my recommendation in terms of a brokerage platform. The next question is, why has Tesla been running so hard? Well, this week they reported their deliveries, and they exceeded what was expected. And the number was down in comparison to the quarter from the previous year. However, they exceeded what expectations were. And so because of that, people were thinking that, hey, Tesla has been slightly up from its last earnings report, and they felt like the deliveries were going to be lower. And there were a few people who followed very closely Tesla deliveries. A guy on X or Twitter, whatever you want to call it, Troy Teslike. He is a guy who religiously tracks Tesla deliveries. He said that they were going to come in around 417,000. And I believe the deliveries came around 447,000, which exceeded the market expectations. And because of that, you saw this massive move higher. As of right now, when we're talking, the stock is trading at 246. And remember, it was at a low in the 140s back in April. So it has made a significant move. And the other thing that was part of the deliveries report, they released some other information about the company, but their energy storage component of their business tripled in terms of its revenue. So that's something that people are now taking into account, that this could be bringing more revenue for the company, not to mention their Optimus robots and their robo-taxi, autonomous driving, all those things. So this move on Tesla isn't done. Now, that doesn't mean go FOMO into it and buy it at this height, wait for a little bit of a pullback, get it at a good value, but there's a lot of room left here on Tesla. And this is just another great example to show too, that just because a stock's beat up and is down doesn't mean it's going to stay there forever, right? Stocks rebound whenever things, turn around. And, with the EV market, it's been down with high inflation. The interest rates are higher, but remember, Tesla's more than just an EV company, right? It's about autonomous driving. That's really what the focus is now. But now there's also this energy component of the business. So keep an eye on Tesla over the next couple months. And that robo-taxi date, they're unveiling that on August 8th. So it'll probably be a sell the news event where you get to August 8th, the stock's going up, going up, going up. And then on the 8th, when that event happens, people sell and you'll see a big correction. So just be aware of that. And then the final question is going back to something that I said on an episode not too long ago. It says, Jeremy, are you still sticking with your first rate cut from the Fed at the end of this month, which is now July? And yeah, I am. A lot of people think that it's going to take until September, but we're seeing the most recent inflation reports. We're seeing inflation tick down. We're in the 2% right now, and it's hard to make those 100th of a point improvements, but we are seeing that CPI, PPI, PCE. Next week, we're going to have brand new CPI and PPI reports, so we'll be watching that very closely. But what we're also starting to see is some weakening in the economy in terms of manufacturing, and so there's contraction there, which means that the need for manufacturing is decreasing, and we're also seeing a slight weakening of the labor market. So jobs are decreasing, the unemployment rate is up. And so the Fed has come out and said that they don't necessarily need to have the 2% inflation to cut rates. If they see some alarming decrease in jobs and employment, they can cut. And remember, their meeting is at the end of July, the 30th and 31st, and Jerome Powell's press conference is the 31st. I think he comes out then, and they released it's like a statement from that meeting at 2 p.m. I think they're going to indicate that there's a rate cut. So I'm sticking to that. Here's the thing. We have all these forecasts that people say, oh, it's going to happen in September. Rarely does it happen exactly when you think it's going to happen. And the Fed has to be proactive. They've also said that, they're going to let the data drive their decisions, but they can't wait for financial conditions to get too tight or the labor market to get too weak. And I think that, like I said, I think the rate cut is coming at the end of this month. If I'm wrong, I'm wrong, but that's just how I see it. So that's Ask a Trader here for episode number 27. And let's talk about earnings season. Because next week we start a brand new earnings season. Very excited for that. It's going to kick off. And really the biggest thing that we're watching is next Friday, you're going to see some of the big banks share their earnings reports, and that's going to have an impact on how the market moves. And I'll show you a list here of just some key earnings reports that we're going to be paying attention to, but really next Friday is the start of everything. So you might be asking, well, what in the world are earnings when it comes to stocks? So 4 times a year, companies report basically how well they're doing. They're basically like, if you think from a school perspective, they're report cards. You get 4 report cards a year. I know I did. There were 4 marking periods when I was a principal, or we issued 4 report cards to kids. And it's the same thing for companies. These publicly traded companies share their quarterly results. There's 4 quarters in a year, and it shows how they're doing, what type of revenue that they're generating, what their production is like, what their forward growth is like, what they're forecasting for the next couple of quarters or next year. And so all those things impact the price of a stock. And when earnings start, they typically begin 2 weeks after the end of a quarter, and they last around 6 weeks, right? And what happens is market makers set expectations for how they believe a company should perform, okay? And so they issue these expectations, and whenever the earnings are reported, they better not just meet, but exceed the expectation of market makers, because what then happens if they don't, you'll see that stock price drop, right? And it's not just in relation to earnings of the company and their revenue, it is also related to their forward growth. And a lot of times forward growth is more important. And what forward growth is, it's related to how they see their earnings, how they see their revenue in ticking up over the next couple of quarters, the next year. And if that's not there, if that growth is not there, then you're going to have investors who are going to be hesitant to put their money in that particular company. Okay. So it's not just about beating earnings. It's not just about beating revenue. It's also that forward guidance piece. What do investors have to look forward to in the next couple of quarters, the next year, that's going to make them excited? And if you go back to the Ask a Trader today, I was talking about Tesla, and they're working to solve autonomous driving, right? They're robo-taxis where there's nobody driving the car, or they're Optimus robots. That's part of their forward guidance. This isn't included in their revenue and earnings yet, but as they're building these products out, market makers are beginning to factor in what type of revenue those things are going to create, which then bumps that stock price up. So if you have a company that doesn't have growth or innovation or things that are going to increase the value of the company, you're not going to see it move as significantly. Okay. Now, here's the other thing. Great earnings, right? If the earnings, the revenue's fantastic, that doesn't necessarily mean that that stock is going to go higher, because a lot of times you'll see companies report great earnings, and what happens? The stock goes down. And a great example of that is Netflix. This last time when they reported earnings, they were solid. The revenue, the earnings per share were great, and it dropped over $60, right? $60. So, and again, remember how I said at the beginning of this episode that these reports are often reported at the market close, 4 p.m. That's what happened with Netflix. And if you're a trader, it could be very, very risky to trade earnings. I don't recommend it, especially if you're in an options position, because you can't get out of it. Shares you can get out of post-market, but options you can't. But even on good earnings, like I said, that doesn't mean that a company's stock is going to go up. And there's a perfect example there with Netflix down $60. And then here's another example. The most recent report from Apple, which is not a huge mover like Netflix or Meta, although it has been running significantly here recently, but its iPhone sales were down and it gapped up $14, right? There was a lot of negative sentiment around Apple, but despite all that, it went up. So a lot of people think that it's easy to just say, oh, well, they're going to have good earnings, so I'm going to play this bullish. Well, that's too reductionary, too simplistic of an approach to trying to trade earnings. And so there are strategies and methods that you can use to trade earnings with what are known as straddles and strangles. And those are option strategies, but trading them with shares, that could be highly risky, right? And you can do it, but essentially it's like playing the lottery. Now, if you have your risk set and you protect yourself and you're willing to lose whatever you're willing to lose in the trade, then go for it, all well and good. But the better way to play earnings is to wait for the earnings report to come in, and then that next day, then you can have your approach. So let's say that we have a stock that's been running higher, and then you have a negative earnings report and a gap down. Well, because of that, you're going to have all that bullish momentum that happened, all those bulls who were trying to push that price up trapped, and now you have an edge to trade that company short. Vice versa, if you had a company that was going down like Apple on their last earnings report and they gap up, you have bears trapped and you could play that bullish. It gives you an edge. That's the better way to approach trading earnings. And if you're a long-term investor, you don't worry about earnings at all, because you're leaving your money there. You're letting it sit and work over an extended period of time, right? But as a trader, it's a lot more involved than just, letting it sit. So it's important to know about earnings. And again, if the market's going to continue to move higher in this bull run, they're going to want to see positive earnings from these companies. And again, it starts next Friday. If you start to see earnings start to drop, then you'll see an impact on the market overall, right? Because the earnings of these companies is what's going to dictate the health of the market and where it goes from here. Okay. So really quickly, let's take a look at some of the big earnings that are going to be coming up here starting next week. All right, so you can see here, this is NASDAQ.com. They have the earnings calendar here, and this is for next Friday. And you can see here, like I talked about earlier, these big banks are going to be reporting. JP Morgan Chase is going to be reporting. And you can see here, they give a consensus forecast from all the market makers. They're saying $4.20 per share will be their earnings. You have Wells Fargo reporting, another big bank, $1.27 per share. You have Citigroup. And then you have some smaller banks, but this is really going to kick things off. This is going to be a driver. And a lot of people are going to be looking at this to make decisions and assumptions and conclusions about the health of the banking market. So be ready for that on July 12th. And then the big day is Tuesday, July 23rd. Look at all these big boys who are reporting here. Microsoft, Google, Tesla. This is a big day. This is July 23rd. Be ready for this. You're going to see lots and lots of movement from the market here. I'm trying to see if there are any other, you have some other decently big companies here listed, but it doesn't get any bigger than Microsoft, Google, and Tesla. So that's the 23rd. So just be ready for these things because they're going to drive the market. And what you can do, and something that I like to do, is I will go back and study how a stock has performed over its last several earnings reports to see, did it gap down? Did it gap up? Did it stay level? Did it gap up and fade down? Did it gap down and fade up? And I'll use that to make some educated, informed decisions about what's going to happen this earnings report. And so I strongly encourage you to do some studying like that if you are going to attempt to play a stock over earnings, because again, it could be very risky. High reward if it works out for you, but you got to protect yourself, right? And so that's earnings. Hopefully that was helpful and you learned something from that. And now, guess what it's time for? Oh, and I remembered. It's time to take a look at Mr. Roku. So here we go. Let's see how Mr. Roku is doing. And there it is. All right, so we could see here that Roku hit that support that I said could not break. And what happened when it did? It got bought up. And we've had 1, 2, 3, 4, 5, 6, 7, 8, 9. And it looks like today's going to be 10 bullish days out of 11, right? And that hasn't happened in quite some time. And you could see what's happening now is the bulls are trying to close this price action over the 100 simple moving average on the daily, which if the price closes like this here today, it will. Okay. Now, the other thing I want to point out here is that the bull volume has been increasing, which is something we hadn't seen in quite some time. We did have some volume increasing around the last earnings report, but we're seeing that happen now. Not a lot of bear push here. This may be the bottom on Roku. And we also see that its earnings is coming up here on the 25th of July. So a few days after Tesla reports, that report's going to come in. And so I don't want to get my hopes up too much for Mr. Roku because we could see the last time it got into this area, the middle of May, here's May 15th, and here's the day before where it made its last most recent high, 66.86, it got shot down. So we're going to see what it could do here, but it did get closes above the 50 SMA, the 50 EMA, and now it's the 100 SMA and this 100 EMA that are above it. If it could start pushing above that, it's got a chance, right? Here's the gap that still hasn't been filled from back in February when it gapped down hard. But remember too, the earnings from last July, which is right here, we could see that it had a really strong move up, right? Look at that. Look at that move. And it got up to a high of 98.48. So potentially that could be on the docket if it can maintain the strength that it's been showing here recently. And this has been a stock that's been beat up pretty badly. And so if it can get a close over this 100, then from there, it's got a weekly 100 above it, the 200 EMA on the daily, the 200 SMA on the daily, and the 50 EMA on the weekly. If it can get above all those, then you could see it's smooth selling. There's nothing to stop it. There's no resistance. So that's an update from Mr. Roku. We'll have to see if that plays out, if it could push higher, but it is starting to make a bit of a comeback. And everybody, that's going to do it for episode number 27 of the Traders Podcast. Hopefully you found value in today's discussion about earnings, what they are, the upcoming earnings reports next Friday from the banks. Hopefully you learned something that you can apply to your trading and investing. If you have questions, please post them in the comments on this YouTube channel. Please like and subscribe. Share this with your family and friends. Feels good to be back. I'll be back here next week, episode number 28. Love you guys. Have a cool weekend. It is so hot out here. It still continues to be warm. And I will see you back here for number 28 of the Traders Podcast. Take care, everybody.